Welcome to Topline, the podcast for the best founders, operators, and investors in B2B tech. Every week, AJ Bruno, Asad Zaman, and me, Sam Jacobs, will break down what's important for you to know to be the most well-informed professionals in the market.
Welcome to Topline Spotlight. It's a short segment. You know Topline Spotlight. It's that short segment where we dive deep on a challenge or a problem with a well-known go-to-market operator or executive from the B2B technology space. We're really excited to have somebody I've known for 22 years, maybe 23 years.
Too long.
Mr. Michael Dzik. Mike is an operating partner. Are you a GP or an OP at Radian?
OP, yeah, operating
He's an
partner.
operating partner, one of the first great operating partners, as many critics have said, in the league tables of operating partnerships. Mike went to the University of Pennsylvania, where he played basketball. He played for the Washington Generals, which is the team that plays against the Harlem Globetrotters. He played professional basketball briefly.
Oh, wow.
He was the head of the technology, media, and telecom practice for Gerson Lehman Group in the early aughts. That's when we overlapped. And then he's done a lot of other stuff. He worked at Percolate when Percolate was the big tech company in New York, and they bought the cab tops. And everybody's like, oh, that's cool. Those are cab tops. How do I get cab tops? And you're like, it's expensive. You get venture capital. You get cab top. And then JustWorks got the Subway ads. And you're like, how do I get the Subway ads? You're like, it's expensive. You got to raise money from the venture capital. And then how long have you been at Radian Capital for as an operating partner?
This is into the 8th year.
8th year. So what is Radian Capital? Tell us who did I miss anything in the intro?
No, it was wonderful, and I appreciate the flowery prose. So thank you in advance.
You're welcome.
Radian, very simply, we're software investors, right? Mostly B2B software. We're in our third fund. We have $1 billion under management at this point. And mostly what differentiates Radian is we're looking for companies that are somewhere usually in like the 5 to 15 million ARR range that have either taken less than 10 million of capital to get to that range, or they've been bootstrapped and are looking at us as really like the first check-in to help them grow. So we're always a focus on capital efficiency, always a focus on really, really clean and strong operating principles. And we do a lot of vertical software, which has become sexy over the past few years.
You're doing all these things before it was cool.
Yeah, man, right? This was the general thesis. Jokingly, when I first met Jordan Weston, I sat down with him and I asked them point blank, I was like, what are you guys trying to do? Because the world needs another fund like it needs a hole in the head. And they were like, well, we're going to try to actually deploy capital in companies that frankly don't need it. But we think that if they can use it wisely, they can grow carefully. And it was just different than what I had heard and seen in VC before, right? Where I said to them, look, if you just need a go-to-market guy to come in and push Buffalo off cliff all day, like I don't want to do that. I'm excited about working with people and helping them grow their business, but not just push them for growth at all costs. And so that's kind of how it started.
Mike, in the vertical software space, there are kind of 3 types of investors. You've got venture investing, you've got private equity that comes in, buys it, flips it in 3 to 5 years. And then you've got firms like Constellation Software that will do M&A within these vertical software companies. They'll buy a bunch of them and try to integrate them. Do you guys follow one approach, like this is venture capital investments and we have that type of horizon on it? Or do you guys play a couple of different games within vertical software?
Yeah, it's a good question. We have a couple different strategies. So we have the flexibility to do minority, majority, and also do subscale or smaller roll-ups in a space. And we've done a little bit of each. I would say probably if you looked at all 3 funds, there's about 30 companies today. I'd say probably 65% of it is minority investments. And then there's a handful of majorities. And then there's a couple of these, what I call the roll-ups. So as an example, we bought a couple things in the cut flower space. So the cut flower supply chain. So most people don't know that like 90% of the cut flowers that you'd buy in the US come from Colombia or Ecuador. And so they all get packaged up off of the farms. They get sent to Miami. Miami is like a central clearinghouse. And then those clearinghouses distribute out and through the country and then down to retail. So there's software that kind of clicks through all of that supply chain. And we went out and we bought 3 or 4 different companies and put them together under one entity. And so it's a little bit of a hybrid approach depending on what we like.
That's neat.
Yeah, it's a crazy world. That's probably the coolest part of this job is that you end up meeting and getting to know and learning a bunch about people and businesses you would never expect to bump into.
That flower cutting thing is huge. How does your job change based on what type of investment approach you guys are taking? Minority versus roll-up versus...
It doesn't much. I think we always say one of the principles is like we want to be the first call no matter what. And it's easy to be the first call when things are going well. I think it's a lot harder when things aren't going well. And I think that's actually when it matters most, is like if you have the confidence to call up and say, hey, I need help, and things aren't going the way they were supposed to go. And look, they're startups, right? Like nothing ever goes to plan. It's just part of the game. And so I think what we try to do is act as that first call as much as we can, be an even and steady hand, and provide good advice. We're kind of in 3 different modes at any given time where on the front end, we'll do a lot of work to just like help you think about how to measure and manage the business and report and get clarity on the operating structure of the business. That's one bucket. Second bucket is we'll do project work. So like today I'll give one of our portfolio's CROs a readout of 10 weeks of pricing and packaging work that we did that they can activate against. And then the third bucket is sometimes, when things get really hard, we may have to step in and actually help run a piece of the business for a period of time, which is okay too.
When you think about, maybe this is part of the reflection, we have a prompt for Topline Spotlight, which is what's a business challenge that gave you some pause over the last year and a half, and what you do to turn it around. And I've been personally thinking a lot about this concept of stall points, which is this corporate executive board paper from the early aughts, and companies that hit a wall, and then some of them, 1 out of 4, apparently manage to get out of it, and 3 out of 4 stay stuck. When you think about turning something around, high grower stops for a couple of years, but then ultimately rediscovers its growth flywheel. Are there common themes that emerge for companies that figure out how to regain their mojo?
It's a really good question. I don't know if there's a ton of pattern recognition necessarily, other than there are kind of like basic principles on most of these companies where when growth slows down, like Percolate was a good example of this, where like we were selling a ton of software really, really quickly, growing really quickly, but we also had a major churn problem underneath. And you can only outrun churn for so long. I personally think you can outrun it to about 20 million, and then reality sets in. Because when you wake up at 20 million ARR and you've got like 70% gross dollar retention, you got to go fill $6 million before you like have 1 penny of growth on that business that year. And so I think churn becomes a real challenge for a lot of these companies where they maybe think they have product market fit, and they kind of did for a little while, and maybe the market moved on them. Or the product didn't advance at the rate that a competitor advanced. And then all of a sudden you kind of see this S curve, right, where they're slowing down on the top line or the churn starts to kick in. And I do think it happens sooner than you think, right? I think it's like in that 10 to 20 million range is when the market really starts to vote, and that becomes difficult.
So how do you get out of it?
There's a couple things. I'm as a go-to-market guy, I always say like product is the center of the universe. And so I always think that it starts and ends in product. I think the easiest way is to be flexible and fast and to keep shipping code. And you're going to ship a bunch of stuff probably that doesn't land. But I think you're going to also ship some stuff that's very valuable. When you're a software company, you have to have that kind of like forward momentum. If you stop shipping, I think that gets very dangerous. And then I think you have to have flexibility on your go-to-market strategy overall. Like we have a company right now that has traditionally sold seats, and they're in a market where like seats are becoming a thing that are getting cut. And so they're trying to rotate into more of just a holistic platform play and trying to reimagine how they go to market through a platform play might be the answer to unlock some of the challenges they're having with the seat pricing. So like, it's a combination of multiple things, but at the end of the day, I always kind of defer to like, if we can ship new product and if we can keep putting things in the seller's bags, we're going to have a puncher's chance to get out of trouble.
Now, interestingly, with vertical SaaS, I've always thought of vertical SaaS as having like more of the TAM challenge overall, unless you're from multi-product. So not necessarily as much of a churn issue. So working in vertical SaaS as an operating partner and kind of going back to these stall points, do you see that just the known universe for these companies is just it, and then it's what do we do?
There's a little of it. By virtue of just staring at some of these things, I get worried when it's small ACV vertical SaaS, right? And so what I'd classify as small ACV vertical SaaS is like below 20K. And when you get in that range, just law of large numbers, as you start to grow, again, you start to get to that like 20 million ARR mark, and you start saying, hey, I've got to grow 6, 7, 8 million this year is our goal. It's a lot of logo pickup, right? And like that gets really difficult, I think, in these constrained TAMs. And that at that point, do you have a second act? Is there another adjacent vertical you can go into,
right,
or is there a payments module that you tack on to generate revenue, or is there something else beyond just the core platform that helps you keep growing? But if you only have that core platform and you do have a limited TAM and the ACV isn't going to really move up very quickly, it starts to get tight pretty quickly.
Well, you have both issues at that point because you're dealing with maybe SMBs because your ACVs are smaller. So you're going to have a retention challenge potentially through that. And then you're trying to grow out of it. So it feels like you have to plan for that. I'm guessing as soon as you guys invest, that's one of the very first things that you're looking at. And you're probably looking at it in a diligence level of like, okay, where do we run out ahead and how about this? And those are questions, of course, that you're asking every founder that you're talking to.
Yeah, I think that's right. And we've been able to successfully put in like a little bit of a fintech play at a couple of these vertical companies where they didn't have a payments product, and that payments product has been valuable. The trick with it is I didn't ever witness or work at a company that had a payments play before coming here. And the trick with payments is that it kind of starts slow and it doesn't accrue a lot of value early on. And then it really becomes very valuable. And most of it just drops to the bottom line in terms of the profit margin on it too. And so, most of this is like white label stuff that, there's a markup on, and you're taking 50 or 60 or 70 bips. And so like people look at it and they're like, why should I waste my time? I'm going to go just keep selling the software. And I think the smart companies realize like, I got to do both. And if I get this payments thing right, it really is actually going to add a lot to the enterprise value of the business long term.
Mike, at these most vertical SaaS companies start with that small TAM initially. They're selling something very specific to a very specific segment, and the very successful ones have always been multi-product companies. How do you test for if this company has that capability to be multi-product? Because these vertical SaaS companies have to become multi-product before your standard SaaS companies have to do. So what's the calculation as investors that, yes, we believe this company has the dexterity to be able to go multi-product, maybe at 7, 8, 9, 10 million in revenue, whereas other companies might think about it at like 30, 40, 50, 60?
Yeah, that's another good question. In some cases, when we're coming in, they already have had a second product or they've had an extension module. So that's obviously a good sign if they've coded past the original wedge. In other cases, they haven't. The product's pretty small and compact and does a couple things really well. It's not... I can't tell you with a straight face that you can stare at someone in a diligence meeting and figure it out. I think it's a part of the magic of making the bet. right? I think you find smart people and you believe that they will listen to the market and react to the market. I think that, again, it goes back to the challenge of when I get worried, when I stare at one of our companies, it's when things stagnate and when they're not trying to skunk work some code or trying to ship things, understanding that, like, yes, like it's probably going to fail, but we're going to make a bet, right? And we're going to make a quick bet. We're going to fail fast. And if we fail fast, we're not going to expend a ton of capital doing it, but we're going to keep iterating on the product side. And if you have that mentality, I think that's healthy. And I think that, like, more often than not, you will work your way out of any jam that you're in. But yeah, I think during the diligence phase, to be able to look at a company and say, like, these guys are going to do it is very hard.
What have you learned about customer discovery? Because that seems like it has to be such a strong skill set within these organizations to be able to talk to your customers and understand what type of multi-product strategy to explore. And these companies have to do it so much more than all other companies, I imagine. What have you learned about how to do that really well? Where do the mistakes happen? Where, let's say, there are two companies that are doing an equal amount of effort on discovery to unlock what the next step should be. What are the ones that are doing it right consistently, doing that the others are not?
Another good question. I think you have to be out in the market as a founder or a leader beyond just having your CRO or your sales team out in the market. And I think that the good founders are always, like, either physically or emotionally on the road. And they're constantly talking to customers beyond just trying to pick up a new prospect that they can go book, right? And so I think having that mindset that, like, the market will tell you what's true. The market will tell you what they like and don't like. Only if you ask, though, right? You have to go out and you have to ask and you have to talk to them. So I think that's one. I think one of the things that we've learned, like starting to run some more pricing and packaging projects over the past couple years, is that it is healthy to do it probably once every couple years, because a lot of what you do inside of that project is you survey both your internal team and you survey the customer base, and you do a little bit of matching and pattern recognition, and you'd be shocked at what, like, your internal belief systems are and what your customers tell you. And I think that's a really honest, like, mirror that gets held up. And so we try to do that and come back and just say, hey, look, objectively, like, don't shoot the messenger on this one, but, like, they don't think this has value. And a lot of times, like, we'll do a lot of stack ranking of features, and we'll do sensitivity analysis on pricing, and, like, people come back and there'll always be two or three things where they're like, I didn't believe that to be true, but now it's changed.
Let's ask you the subject of the question, and then we definitely want to ask you your influences and ideas, because AJ and Asid, Mike is the most voracious bibliophile and reader. I don't know if he still is, but there we go.
There he is.
Yeah, he like reads so many books in a quarter, and then he puts, anyway, so I want to hear what he's reading and what's interesting. But what is a challenge that is it the pricing and packaging? Like, what's something that comes to mind over the last year and a half, and how'd you guys address it?
Yeah, that has been one thing that we've really, like, put our energy around. And I'll tell you, I was terrified to even touch it with a 10-foot pole for many years, because I didn't have a methodology, number one. I needed a methodology. And if you go in and you try to do this work without a methodology, I think it ends in tears, to be honest. And I think you'll do more harm than good. And so we just went out, we looked at some stuff that some other people had done and paid for, and we kind of cobbled together some best practices and built our own standard kind of like 12-week methodology that compiles a bunch of different artifacts and brings it back to the founder and the CRO in a way that I think is useful and actionable.
Any patterns that you do see in pricing and packaging, like, you know, add a third tier or lower your, I don't know, like any rules of thumb?
Yeah, so there's usually 5 rubrics of, like, SaaS packaging. You have, like, all-in-one and a la carte on the edges. And then you have persona-based, good, better, best, core, and more. And those, like, kind of dominate. And you can look at the market and like there's successful companies that do each one. Like Datadog does a la carte, and they're ripping. And then you can go and you can find different companies. A lot of people orient toward mostly the good, better, best. And if you read like the guy, I think it's Marcus Riviera.
Marcos Rivera. You know who he is?
Yeah.
Our new San Diego chapter head.
Yeah. There you go. He spun out of Vista and has his own practice, and he's written a book on it. And there's this one I just read actually. This guy was doing it for a long time at McKinsey, capturing value.
Oh, that's
free
cool.
spot. Yeah, free spot for him. So I think like you just read a bunch of what these guys that are smart have done, and you try to take the best practices. But I think that to answer your question, a lot of times, and they even call it out. Like you ask someone, you're like, "How'd you get to your pricing?" They're like, "Kind of made it up." Like we were kind of just trying to figure it out as we went, which is like totally acceptable and reasonable. Now you get to a point where you've grown to a place and the pricing becomes a problem because it's too complex or it's too customized and it's running off the rails, or like we have one where we did it and like 85% of the logos were sitting and hanging out at the bottom package. Right. And so like, you can't have that. The feature gating wasn't right. And so you get to like the truth of what's going on with the business by doing this. And I think it unlocks a lot of other interesting like learnings as you do it.
Yeah. Marcos is doing a pricing exercise for Pavilion and beginning in May. Cause on one side it's too complicated and the other it's too simple, and you're like, you've got value trapped, where some people really want more from you, but they can't pay more. And some people probably want less and they can't pay less. And so they end up canceling. So that's the hypothesis. All right. So Capturing Values, a book that you recommend. Give us one or two others, and maybe a fiction book, maybe if you're reading something other than just business, like whatever. Ideas here.
I'm only 50 pages in, but I'm reading Blood Meridian.
Oof. That's darkness, my old friend, the priest.
Yeah. So looking forward to the finishing of that. That is one that's on the fiction side. I just got done the Mosquito. It's long, but he opens the book and states that like it's not the lion, it's not the tiger, it's not the shark. The mosquito is the apex predator of man. And there's maybe been, I think, like 110 billion people that have walked Earth all time, and the mosquito has helped kill half of them.
Wow, that's cool.
That's crazy.
That's interesting.
That's one of those crazy stats that you hear and you're like, I just don't understand the world. I recently heard somebody talk about dinosaurs, and dinosaurs have lived on Earth for 145 million years. Us humans have lived on Earth for 200,000 years. And you put those two things together and you're like, oh shit. Like, this is one of those stats that you just shared.
Yeah, it's a moment where you put the book down and you just stare out the window.
Mike, if folks want to reach out to you that are listening, maybe they would like some of your money and maybe would like to offer them some.
Not my money.
What's the best way to get in touch with you?
They can email me. I'm Mike at radiancapital.com. That's an easy one.
Awesome. Mike, thanks for joining us on Topline Spotlight. We appreciate your support.
Thanks,
Yeah,
Mike.
great to see you guys.
That was great.
Thanks. Thanks, Mike.
Thanks for listening to Topline. New episodes come out every Sunday. If you like what you heard today, subscribe so you never miss an episode, leave a 5-star review, and share it with your friends. Don't forget to join our Topline Slack channel to connect with us and discuss the topics we cover with other listeners. Click the link in the show notes. Lastly, if you're interested in joining Pavilion, you can learn more about membership at joinpavilion.com/membership. Thanks again for listening.